My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one of my friends. I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. In the end, it doesn't matter what we, you and me, think. It matters what they think. I'm talking about the people calling the shots. Yep, the Dow surged 338 points today. S&P gained 0.95%. NASDAQ fallen 1.02%. Because President Xi and Federal Reserve Chairman Jay Powell made decisions that they actually knew would spark rallies. I don't think they were trying to juice the stock market. It would be a weird move from the president of China in particular. But they wanted to do right by as many people as possible. Higher stock prices were just a byproduct, a collaterally happy byproduct for everyone who's invested. Let's tackle our country first, okay? The Federal Reserve decided not to tighten here, although they talked about doing it in the future, because they don't think it's appropriate to raise interest rates while unemployment remains elevated, especially for historically disadvantaged groups like African Americans, although you don't ever hear the reporters talk about that. Jay Powell doesn't want to leave anyone behind. He knows the Delta variant is weighing on the economy, particularly on the class of people that we just mentioned, and he's not too worried about the cost of keeping interest rates low. He's worried about people not sharing the prosperity. I like that. He's going to remain accommodative until the labor market's in better shape. And that's been consistent. He's been saying it all along. Now, you're going to hear from plenty of experts tomorrow, and even today, who think Jay's wrong because the inflation that's raging right now could deal real damage to the economy long term. They'll whine that the inflationary pressures that he's saying that can be abated one day, like the semiconductor shortage, aren't simply solved by raising interest rates and crushing the demand for semiconductors. Can't have a shortage when nobody's buying. You could say the same thing about a lot of skyrocketing in plastic, natural gas. Look, if people stopped using it, if they didn't have any money, if they were hurt, then they would use less of the product, and the supplies would therefore become more bountiful. Inflation would end. Powell is simply, to them, blind, deaf, and dumb to everything that's really happening in the country. They see 4+% inflation as a dire national emergency, and they think he's nuts for allowing it to continue in order to boost employment. Me, I don't care what any of those people think. I don't even care what I think, at least not when it comes to monetary policy. I only care what Jay Powell thinks, because he runs the Fed. He's got all the divisions. We have nothing. He doesn't have to listen to anyone except for his fellow open market committee members, not that they even really matter. Although some of these Fed guys, they seem like really good stock pickers. Really good. If Powell wants a tight labor market to help poor people, and he thinks that can happen by keeping rates low, well, that's what he's going to do. Doesn't matter what any of these commentators have to say about it. They can trash him and say he's public enemy number one and make specious arguments about how inflation hits the poorest people the hardest. Never mind that you can say the same thing about unemployment. None of that stuff matters to the Fed, or really to Jay. Personally, I agree with Jay Powell. But again, my opinion is also irrelevant here. I know that. That's how you should be thinking. See, Jay, he's got the juice. Now let's circle back to the stock market. There were plenty of investors who thought Powell would crumble and give in to these inflationistas because they see higher prices everywhere. They figure he did too. They didn't expect he'd be completely dismissive of their views. He doesn't even really want to talk about tapering back on bond purchases until we get a better read on the damage from the Delta variant. Powell has been remarkably consistent in his views, but the inflationists don't want to listen. They don't like him. They want a ticker-taper parade. But if you were one of the inflation hawks who thought the Fed would have to take a tough line today, then now you got to go buy stocks because Powell didn't listen to you. And Powell's put the concerns to rest. See, these commentators who actually run money for people, they can't refuse to buy stocks because they disagree with his politics. They have investors, and those investors won't forgive them for sitting out on a rally that they don't think should happen. You see, the clients are not ideologues, or at least they're not ideologues when it comes to making money. So even though all these commentators keep coming on air and saying that Powell's outrageous, as long as he's running the Fed and they're not, these money managers need to buy stocks or else they'll underperform and their investors will bear from their underperforming funds at the first opportunity, regardless of whether they think there's raging inflation or not. So these inflationists now have to buy stocks because Powell simply refused to play by their playbook. He runs the Fed. They just run money. They lose. He wins. Tomorrow they can and will start heckling him again. But I got news for them. Jay is like Tom Brady. He wears the rings. They're just grasping for his jersey after he's released the ball. Now let's deal with China. Like Jay Powell, President Xi also wants common prosperity, but he comes from a different intellectual tradition, the Marxism, Leninism, Maoism school of thought. China spent 40 years using free markets to lift people out of poverty, but now they're cracking down on the wealthy in order to promote equality. Lately, the Chinese Communist Party has gotten aggressive about ruining the careers, not killing, but just ruining the careers of people who profited from gaming or financial engineering or e-commerce or ride-sharing. But she hasn't tackled the obscenely rich property moguls because China's economy is very much driven by real estate, as much as 30%. Then he gets his chance with this Evergrande, the colossally horrible real estate conglomerate that has $300 billion in obligations. I mean, countries don't have that. He made it clear that he wasn't going to bail out the company because they're reckless, and they were run by, at one point, the richest man in China. Now, that caused a ton of selling in everything related to China. Hey, by the way, including the mineral, mining, oil, and industrial stocks, even here. Even our banks got hit, despite the fact that they can't really do much business in the PRC anyway. But stupid money managers always think all banks are tethered to each other, so they sold them anyway. Did I call him stupid? I'm sorry. I should not have used that. I should have said ill-advised. Last night, though, President Xi, he blinked. He decided to bail out the smaller lenders, those that bought property from Evergrande, and the local banks. He didn't mean to set off a big worldwide rally. He knows there's still some rich people who got away with this. He's probably furious himself that he wasn't able to do a precision bombing of the rich without hurting the poor. So instead, he acted to stop the contagion, and the rich lived happily ever after, and so did the stock markets. Evergrande's got another big bill coming due tomorrow, the one they owe foreign bond owners. These foreign bond buyers are mostly from countries that are totally on the hook to China anyway. It's like opium to them. They can't get away from it because, remember, China is the second largest economy in the world, and they're addicted to selling product to China. So they're not going to care about these bonds. They'll just take the hit. That's why, despite what you heard in the press, the risk from Evergrande never really was systemic. Okay? Because everybody wants to do business with China, so they just are willing to overlook losses. Now, let's put all this in the context of, I think sometimes imagery is powerful. Let's put it in the context of a bull. Okay? A bull. Did you know I used to have a bull, and his name was Norman? For 30 days, the cows always ruled the roost. The cows, by the way, are women. Bulls are men. Well, you know what? I get female, male, okay. For 30 days, the cows ruled the roost. But one day a month, the bull showed his prowess. For those of you who don't get this agricultural analogy, as much as I like the cows, especially fine touch and ambush, on that one day each month, the bull, like Jay in these open market meetings, was in charge. The cows were submissive to the bulls. They didn't have the votes. Right now, we got two bulls in charge of the financials of two countries. And at least for the moment, they don't care what anyone else has to say. They have a job to do, and they're doing it. The bottom line, you can be a cow and try to avoid the bull all you want, curse him, charge him, run from him. But every now and then, the bull gets its day. Today belonged to Jay and Xi. While I've still got plenty of worries, two of the biggest have now been taken off the table.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.